Okay, guys, welcome to the journey, this reading journey. Um, Thank you for joining. It's a privilege for allowing me sharing my own ideas about the market. So, today we're going to be talking about the second phase of market structure, which is the highs and the lows. So last time we talked about time frames. So today we will talk about the market highs and lows. So this is not going to take long. It's not going to take long. It's not going to take long. For instance, this is the market. So this is the market. This is the market. We have the bearish movement and we have the bullish movement. So this is the bearish movement and this is the bullish movement. Bearish movement, and bullish movement. Now, inside the bearish movement, we have highs and we have lows. And also inside the bullish movement, we have lows and we have highs, right? Lows and highs, lows and highs. So I'm going to show you what they are called. Just two things: highs and lows, highs and lows, highs and lows. So when the market is on a bearish movement, when the market is on a bearish movement, this area is called a lower high. So, okay, let me just a lower high. So every top, every area formed at the top of the bearish movement is called a lower high. And for every so this is called a lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and lower low, lower high, and lower low until the market changes character or direction. So how would you know when the market has turned from lower high, lower low to the bullish movement, to the highs and lows in bullish movement? Is when you see a change of character, a break of structure. Number one, you must see a break of structure. Number one. Number two, you must wait for the retest of that structure, the retest of the previous low. The low it break from. The low it breaks from. So this is the low. You must see a retest. So when you see a retest, the market must take out this high. It must take out this high. So that is where you call the next move higher high. So now this becomes higher high. Please listen to what I said. So how do we determine that we'll get an higher high right here? First of all, we have to see a break of structure. Second, we have to see a retest to the low. Third, we have to see it take out this high again. So here becomes higher high, and here becomes higher low. So here becomes higher low, higher high, higher low, higher highs, higher low. Also, for us to determine that there is a change in structure, you also have to see a break of the previous low. You have to see a break of the previous low. You have to see a wait for a retest and a break again of that low. So automatically here becomes a lower low, a lower high, lower low, so on and so forth, so on and so forth, so on and so forth, so on and so forth. You get what I'm saying? So this is how to identify lows and high, especially when the market is about to change from bearish to bullish or from bullish to bearish. So this is how to identify. This is how to identify. So I'm going to clear this out. I'm going to clear everything out so that we can go to it. So let's use these. Okay, now before that, now you have to know that in each time frame, the higher the time frame, the valid the lows and the high. The higher the time frame, the valid the lows and the high. Did you get what I just said? Okay, now let's use a forex pair, for example, Euro USD. Okay, so like I said, the higher the time frame, the valid the high or the low. So the validity of every high and every low, it's dependent on a higher time frame. For instance, for instance, so this is a low. You see that this low is very sharp. It's very, very sharp. Came to retest, triggered the buy movement again because of the low. You seen it? So why it moved up is not our business today. Why this moved up is not our business today. But I'm just showing you that the bigger the time frame, the more valid the high or the low is when it's on a higher time frame. The more valid it is, the higher and the low, the bigger the time frame. So we can also see that if we break this, if we take this up to daily time frame, you can see that what you saw on our fall is not the same thing as what you see on the daily time frame. And they are not the same. Are you seeing it? Are you seeing it? They are not the same. So on a daily time frame, these are not valid on a daily time frame. These are not valid on a daily time frame. This is valid. This is valid. That was why when the market came back to test, it broke down. So this is the cost. This is the cost of this movement. This high right here is the cost of this movement. This is valid. This is valid. So the validity of every high and every low is also dependent on the higher the time frame. So if we come to the 15 minutes, we come to the 15 minutes, we can see that each time frame has its own highs and lows. Now, The high you saw, this high now you are seeing here, might not be seen in a higher time frame, might not be seen, but in a lower time frame it is valid. So so watch this. This is the high. This is the high. So this might be the total highs right here might be a particular high on the higher time frame. Let's watch. Can you see? Okay, this is also a high. So let me see on the 4 hour. Okay, now it is a particular high on the 4 hour. I see it. So this order, this now is not seen. It's seen on the 1 hour, but it is not seen on the 4 hour. So every highs and every low, they are also valid in their own time frame. They are valid in their own time frame, right? So you must know this. Even to minute one, every high and every low you see here are very important. They are very, very important. Every high and every low. So this is the low, this is the low, this is the high. The low, the high, the low, the low. They are all very important, right? So I think this covers everything you need to know about highs and lows, highs and lows on the market structure. Covers everything you need to know on highs and lows, right? So so on our next subject, we will be talking about how to identify um, what, what I call it is data strategy. What every beginner should learn and use to trade when they are about to trade. The strategy they should use to trade. It is also connected with the lows and the highs. Very simple. It is just very simple. Just very simple. But we are going to be talking about the short term and the long term continuous move. Short and long term continuous move. It's very simple.